Welcome to the Bitcoin Playbook, where we discuss proven strategies for using Bitcoin in your business. I'm your host, Josh Friedeman, and joining me for another Roundup episode are Jon Gordon and Trey Sellers. Today on The Conversation, we talk about the recently announced 21 Capital, the Arizona Bitcoin bill, and Bitcoin native KPIs for business. We're going to get to that conversation right after this. Business owners, unlock the benefits Bitcoin has to offer your business with the Bitcoin for Business Quick Start Guide. This 27-page guide highlights the 6 ways you can grow your business with Bitcoin. Check it out in the show notes. Jon, Trey, welcome to this Roundup episode. Trey, let's start off with you. The big news the last couple of weeks, I say last week, and it really took over Twitter for a few days, is this new company, 21 Capital. We're going to start off by talking a little bit about that. What are your reflections? How did you take the news, and what are your thoughts on 21 and their business model?
Yeah, my initial reaction was a little bit one of confusion, to be perfectly honest. You know, the evolution of MicroStrategy becoming strategy and then focusing, primarily on Bitcoin, still having the side business going, but just, the focus of Saylor and the company more broadly speaking is about basically creating Bitcoin paper in the traditional financial world, selling that and capturing premium that is built into the fact that they've got this massive Bitcoin treasury. And that evolution happened kind of naturally, right? Like that wasn't the original intent. And it's developed over the course of a few years. And now what we're starting to see is ventures like this 21 Capital, and there's talks of some other very similar ventures. I'm aware of one that's happening in the Brazil market as well. And basically they're just coming directly in with the sole intent of creating new paper in the traditional financial world to sell to people who may not have access to Bitcoin in the direct sense, or are looking for more leveraged plays, or some other way to access the power that Bitcoin has from a price perspective, the volatility that it has, and all that kind of thing. And so I guess I wasn't necessarily expecting that you would just get these like funds that are solely focused on producing paper, but I guess I shouldn't be surprised, just given my Wall Street background, as to why that would happen. My expectation is that the more players come into this space and follow this type of strategy that's just squarely focused on issuing paper, the more quickly that accretive dilution becomes actually very dilutive, diluted, meaning there's, at some point there's not as much juice left to squeeze. It should compress premiums because there's so many more options. And the question that will be really interesting to see play out is, how quickly do we get to a point where the market is kind of saturated with Bitcoin paper? Where do we get to a place where there's just not enough demand to fill the amount of supply that's being put out into the market for those specific types of products?
One thing I probably should have said at the very beginning, if you spent much time on X in the last week, especially in the Bitcoin realm, you will be fairly familiar with 21 by now. However, if you're not, then this is something that's essentially a joint venture with Tether, SoftBank, and Cantor Fitzgerald, or at least Cantor Equity Partners, I believe, is the specific company. I don't know how many subsidiaries Cantor has. And then Jack Mallers is the CEO. So some names that people know, some names that people trust, some people maybe don't trust all of the people
there are definitely
involved.
some heavy hitters there, right? Like
definitely,
let's not mince words about that. I guess it's maybe too early to tell how exactly that strategy of just like coming in and issuing paper to feed to Wall Street is actually going to play out. And I know that they're talking about some other services that will go with that as well, as kind of like bringing in other additional revenue that's maybe adding actual value to the market. But we'll have to wait and see.
And I think it's interesting because it's heavy hitters, but an interesting mix of heavy hitters. I mean, Jack Mallers is the CEO of Strike. A lot of Bitcoiners love Strike, use Strike. And so it's interesting. It'll be interesting to see how it pans out. Jack is talking about this basically being what strategy is doing, but more of a pure play. And then there's also the element of the retail investor, or it could be anyone else, probably retail investors that are jumping in, trying to get in on this early. The stock price has more than doubled across the last week or so, and in some ways it's like, oh man, I wish I could have doubled my money, but the MNAV is just so high now. It's like, how is this? Nothing's even closed. Nothing's official yet. How can it be worth so much? So there are definitely some concerns. It's interesting to see. And I didn't even know that there were other companies like companies in Brazil doing this. But I wouldn't be surprised if this is effective, or if this is popular, to see more of this popping up.
Yeah, and the more premium that's built into those securities, the more the more incentive there is to issue more equity or more shares, or come in over the top and capture that premium. So there's always going to be this compression force that's happening of bringing that premium back down toward the underlying NAV. And we've seen this with strategy, with MSTR, is that anytime the premium gets a little bit too out of hand, Saylor has all the firepower he needs to come in with equity and just smash it right back down, right? He's just hammering down that premium, because why wouldn't he sell $3 worth of stock for for this underlying Bitcoin that is very much undervalued relative to the premium that he's able to capture? So there's always going to be that. And the more people come into the space doing the same thing, the tighter those premiums are going to get.
Yeah, I think it introduces more competition here in the equity markets. I mean, the SPAC enables a very quick to market vehicle. They have to announce in advance, of the deals closing, and kind of give the market the heads up. So that's why we saw that action in the CEP ticker. So, I mean, I think traders are going to love the volatility of it. Even Michael Saylor was welcoming it and saying, here we go. And, at the end of the day, there's only going to be 21 million Bitcoin, and all of these other, paper instruments are, in a way, a speculative attack on the dollar. But really, you can issue, as Trey said, just more equity, more stock, and keep kind of diluting a bit. And but we've seen some of the best performing stocks globally, such as even Metaplanet over in Japan, are the ones that are just buying Bitcoin. So if there's still an appetite, there's still demand, there's still many institutional dollars, whether they're hung up in pension funds or other traditional vehicles that still can't buy Bitcoin directly. And this is just going to be another stock to add to their bucket. And I think definitely with the heavy hitters there's certainly Bitcoin products and Bitcoin banking-like products that need to come to market that we'll see if they deliver on, such as Bitcoin lending. Strike's rolling out a product like that really for the consumer. So we'll see if, there's just with this backing of more capital that makes it more those products more feasible and can drive down the interest rate even further for people that want to take out loans against their Bitcoin. So I think there's a lot of positive aspects that can come out of it, but we'll see. Time will tell, and the market will get to decide who wants to participate in this vehicle. I think as an individual, it's easier to just continue to stack sats, but it's certainly interesting to see. And also Tether putting to work their significant stash of nearly 100,000 Bitcoin. I think they're putting almost a third kind of into this vehicle. So it certainly made a splash, and something we'll continue to follow in the coming weeks and months.
One thing that's interesting to think about as from an investor's perspective is that these types of vehicles really should and do shift the focus of using the dollar as the denominator in your returns versus using Bitcoin in your returns. And so if you are coming in and looking at these securities, you need to be thinking about, okay, well, I've got the option of buying Bitcoin directly, or I can buy this paper. And your returns or excess returns relative to just buying Bitcoin directly, they depend on the premium that you are purchasing those shares at, either staying steady or going up. If the premium starts to compress, all of a sudden you're underperforming just buying Bitcoin directly. Now, some investors in the institutional side don't have the option of buying Bitcoin directly. So, they kind of have to live with those subpar returns. But for anybody else who's looking at this and thinking, okay, well, I am going to outperform Bitcoin by buying this paper, and then I can sell at the top and do what Saylor's doing to capture a premium there and then buy Bitcoin with it. Just be careful that you understand what premium you're actually buying this at, and make sure that you're watching that very closely, because if it starts to compress like I expect it will, you will underperform just buying Bitcoin directly.
Would you anticipate that over time the MNAV essentially goes to one, or definitely like the low ones?
I don't think anytime soon, although like certain events or deep drawdowns in the price of Bitcoin could certainly have a more outsized impact. But it's over a longer period of time that you just get this natural compression of the premium happening.
Yeah. So it's interesting to think about some of the first of all, you have the MNAV, which, let's say that it's at 2. But then you also have this other KPI that Saylors introduce of Bitcoin yield, which essentially is them buying Bitcoin so that you have more quote unquote Bitcoin per share, although it's not quite that simple, but they're holding more Bitcoin for the amount of shares that exist. And so I think the last thing that Saylor has recently said is something like a 17 point something Bitcoin yield year to date. So is that something that assuming that you are an investor in MicroStrategy or some other company, do you care about the Bitcoin yield, or do you care more about the MNAV multiple?
Well, I think they're two sides of the same coin, right? And John, you can jump in here and as soon as you've got a thought to share here, but like they're two sides of the same coin. Like what Saylor is representing, what Semler is representing as a Bitcoin yield is how much of that premium can they capture so that they're increasing the amount of Bitcoin per share that is on their balance sheet. And so it's definitely relevant, but it's the other side of the script there when you're talking about Bitcoin yield versus capturing this premium. Anytime they come in with equity issuance, it's going to compress that premium and lead to a Bitcoin yield there. If they're issuing debt, it should have a very similar effect, except you're not actually diluting the shares. So you're getting more Bitcoin per share. You actually have a ratcheting up of leverage there, which gets you a higher yield.
Yeah, I think the Bitcoin per share is a really interesting metric for companies to be highlighting, especially the ones, of course, starting with the treasury strategy, and really any profitable publicly traded company and even private company that can use that as a metric to say we're adding Bitcoin to our balance sheet. We have Sats flow into the business, and there are a lot of ways to increase that, and being able to pay 0% interest over 5 years and take a chunk and buy Bitcoin and do the things that kind of the bigger public players can do makes sense that it's it's happening. I think it's been it's almost been 5 years since MicroStrategy started. And I think it's sort of shocking we haven't seen as many players just do this because it's been so successful, and they've had some of the best returns in the entire market during this half decade. So we want to see more players coming and doing it, and eventually, as you said, Trey, I think that those additional yields will drive down back towards to the point where, okay, you're just going to make more holding and buying and holding Bitcoin. But for now, using Bitcoin, and we're really trending then towards it as a unit of account in a way. I mean, it is Bitcoin per share, so shares are almost the denominator too. But we're kind of taking dollars out of the equation, and we're just looking at the value of the company versus the value of Bitcoin, and how much Bitcoin you can stack. Because you can always print more shares, but you can't just print more Bitcoin. So you need to be doing business activities that generate more Bitcoin, whether it's selling a medical device or offering Bitcoin native products.
Yeah, I love that point. I was thinking the same thing, right? It's this redenomination of our vernacular across the market to start thinking in Bitcoin terms, and the opportunity cost of not owning Bitcoin and all of this, right? We're thinking, we're talking, we're seeing leaders in the space talk about Bitcoin as a unit of account, and that that when that feeds into the psyche of the population and they start like internalizing what that means, it's going to continue to drive adoption, because that opportunity cost is going to become more and more apparent. And it just helps to build the network effect that can lead to more medium of exchange type type activity as people start thinking about what the economy looks like when you price it in Bitcoin.
So people love the cash flow. They love yield. I was just talking with someone recently who was, and you've heard this all the time online, people concerned with Bitcoin because it doesn't generate any cash. It doesn't generate any yield. I think it's interesting to start hearing people talk about Bitcoin yield. It at least gets their, it gets their attention. However, there are other ways of getting yield. Trey, you brought this up before we started recording. I haven't looked into it, so hopefully you can enlighten us here, but Coinbase's new yield scheme. Do you know much about it? And I think it'd be interesting to maybe juxtapose that to what, for instance, Strategy is doing.
I don't really know the details of how they're
What's generating the point of looking
yield.
Into it, right?
Well, it's not that there's no point in looking into it. It's more just, my assumption is that they're somehow using Base and this thing that they built on Ethereum, and that the yield is coming from some type of rehypothecation, some type of token economics or whatever. And all of this is like a replay of what we saw in 2022, 2021 that led to so much chaos in the market. Now, how popular of a product is this going to be? Probably pretty popular, because people can't, for whatever reason, just leave it alone and say, okay, the yield I make is the increased purchasing power along the way of just owning Bitcoin, right? Like, that is the yield. That's the yield that you should be expecting from just holding money, as it gets cheaper and cheaper to acquire goods and services in the economy because we're getting more productive, right? Like, that is the yield that you're looking for when you hold money directly. We have to have this other concept of yield in the current environment, which is primarily built on treasuries that are printed into oblivion, because you have to overcome the increase in the money supply that is happening on a day-to-day basis. And so you have to be compensated for that just to stay in the same place. And then on top of that, you are expecting some type of yield for risk that you're taking. Well, this yield on Bitcoin, there is no inflation, right? So it's totally risk on the venture that the people who are taking this Bitcoin or these assets that are being lent out, what risk are they taking? And it's a total black box. I can't imagine it's that much different than anything we've seen in the past. And we'll continue to see pain until people learn this lesson by touching the stove for a third or fourth or fifth time, I guess. This is the way we've got to go.
Yeah, that's a great framing, Trey, and it's unfortunate, but I think also human nature that it keeps happening, time and time again, not only in the last few years, but of course over the centuries. And as you mentioned, really in this on a fully fiat regime, you have to issue and continue having an expanding amount of money supply credit in the system for it not to cave in on itself. And ultimately it leads to people needing to earn their money twice. You can't just save your money in the dollar, and that's been ingrained in people. We know we need to take that additional risk. I need to put it in the stock market, or I need to buy a house or do something else that is going to be relatively more scarce than this thing that can be printed at no cost. And so when you introduce Bitcoin that has a cost attributed, and production will move to the, and price will move to the marginal cost of production, which is actual mining and energy. We have this tie to the physical world, and not an inflationary system. The inflation rate of Bitcoin is now less than gold. So 15, 16 years into Bitcoin's existence, it's really showing the other edge of the coin of a different way of us having a monetary system. So people that are new into the market maybe weren't around a few years ago, and as you said, need to touch the stove, but hopefully can avoid some of these schemes to earn a few more percent at an incredibly high risk, instead of just holding your Bitcoin in self-custody and enjoying the purchasing power gains. So hopefully there won't be as many blowups, and Coinbase is certainly a huge player in the market, holding a lot of the ETF coins and other Bitcoin out there. So even compared to what we saw with BlockFi and Celsius and just an FTX and all the rehypothecation that happened, it's certainly still happening out there. And so you just need to be cognizant as an individual consumer and wary as you just evaluate Bitcoin and the rest of the crypto ecosystem companies and what the actual offering is. And hey, it's probably not going to be worth that risk because to get a few extra percent when you have an asset appreciating 50, 60% in purchasing power every year anyways.
Yeah, I just looked it up. It looks like it's actually coming from a basis trade, right, between Bitcoin and Bitcoin futures. And so that is less risky, I would say, than some of the DeFi yield farming type of stuff that we saw in 2021 and 2022. There's probably some compression that happens as that becomes more liquid, so your yields are going to compress a little bit more. And you've obviously got counterparty risk that you're trusting Coinbase with any Bitcoin or any value that you're securing there. But who knows? Maybe they're able to actually provide a fairly consistent 4% yield or something in Bitcoin terms that would allow for some institutional investors who are more comfortable going out the risk curve to get a little bit of extra juice on that trade. For me, it's not worth it.
I do appreciate the Bitcoin yield conversation a moment ago, talking about how they're really driving forward the idea of Bitcoin as a unit of account. It becomes much more natural for people to talk in those terms. I was thinking this the other day. I'd be interested to hear your thoughts on this. But you have these three stages of store of value, medium of exchange, unit of account. And it seems to me that the distance between medium of exchange and unit of account would be a lot shorter than from store of value to medium of exchange, which is where we are right now. Any thoughts on that? Does that square with you, or do you feel like the entire thing is just going to be a long slog before we get to full unit of account?
I think that sounds right. I think the unit of account framing in people's mind is actually very important to drive medium of exchange, right? People need to understand the value of holding Bitcoin and start denominating their returns and their net worth in Bitcoin terms so that they are more incentivized to say, hey, I'd rather you pay me in Bitcoin. And as a business owner, if you're denominating your balance sheet in Bitcoin, it's much easier for you to make the translation between receiving Bitcoin and payment versus receiving dollars, and you've got less friction if you're doing that. And so I just think I don't think it's like this linear progression from store of value, medium of exchange, unit of account. Like there's some kind of hard cutoff. I think they all influence each other. It's a very dynamic type process. And actually like people's mind shift around valuing their lives in Bitcoin can have a very strong influence on the medium of exchange piece of it and then reinforce the store of value aspect of it.
Yeah, I agree. And I think we will see more of that S-curve adoption that we see with technology, and especially as money is technology and the network effect. So yeah, I do think that time frame will be even more compressed. But it is the individual decision, the business owner decision, as you're saying, Trey, to really decide to look at Bitcoin and measure your value, measure your production in terms of Bitcoin. I've been doing this personally for a few years, and it's really helpful to just take a look and see, and you can just multiply dollars by sats per dollar, and there you go. Refresh their Clark Moody dashboard or wherever else you want to get your real-time data. But it's helpful to kind of keep coming back to that decision point, because as you're making economic decisions and you have an opportunity cost now of, okay, if I actually measure this in Bitcoin, do I really want to purchase this good or service, or is there another approach forward? And every individual is going to continue moving in this direction. And so to your point, Josh, I do think it'll be a little bit faster, but they certainly interplay. And even, of course, before the store of value came into the equation, it was a collectible for a year and a half, right? And that's how money originally evolved. And we had shells and we had other commodities and salt and cattle that provided some value over time. And we have this natural emergence of money. So to have this happening during our lifespan right now, coming of age here, it's really remarkable to see. And I'm just grateful to be here for the ride.
Yep. So another thing that is probably worth discussing, it kind of snuck up on me. I know the stories like this have been in the news, but Arizona apparently has passed a Bitcoin reserve bill. This was, a surprise to me when I heard this yesterday. I think it still has to be signed by the governor. And it'll be interesting to see what those dynamics are like, what the pressure might be on her, since, the Trump administration is very pro-Bitcoin. She obviously Trump is a Republican. She's a Democrat. What will this be like? I don't know how much bipartisan work there was on this bill, so it'll be interesting to see. But just a couple things. It's going to be it's going to allow the state to hold Bitcoin in treasury reserves. Will make Arizona the first U.S. state to legally hold Bitcoin. It'll be interesting to see if this is something that actually happens and what that would mean, especially maybe throughout the entire nation, but especially in Arizona for businesses and individuals as far as their acceptance of Bitcoin and their interest in actually beginning to purchase some on an individual basis. You guys have any thoughts on this? It'll be interesting to see if Arizona starts moving before the United States government does, as creating a Bitcoin reserve.
Yeah, I think Arizona being first is great, and we've seen dozens of states introduce these bills. And as you mentioned, there's just I think Bitcoin should be bipartisan. There's benefits to everybody for adopting Bitcoin, especially as a state, and improving fiscal positions of states where many of them are deep in the red. And I think it makes sense that a state like Arizona, which already bucks other trends like not changing the clocks every 6 months, they stick true to the sun. They have some more sound principles here in adopting sound money. So I think seeing which states is certainly interesting. I've spent some time in Phoenix and Sedona and around Arizona, and would certainly love to see more business owners there. And I think there's definitely an active community both in Bitcoin and Nostr in Phoenix that's growing to encourage more of the circular economy using Bitcoin as a medium of exchange. But this is certainly a huge step forward and a track that other states can continue to follow, because many of these bills are not passing certain houses or senates, and so it'll take like a specific kind of wording in bill, deep in the policy space to make this happen. I'm curious, Trey, if you spent any time or if you have clients out in Arizona and maybe could have seen something like this coming.
Josh, did you say that it passed in the House and Senate in Arizona, but has it been like signed into law from the governor, or like what's the next step there?
It still has yet to be signed by the governor, as far as I could tell.
Yeah. I mean, I do think that the states have a lot more ability to be nimble on these types of things. Arizona is kind of a purple state that has a swing state that has been up for grabs in some of the more recent elections over the last decade or so, which I think is an interesting dynamic. I know there's some talk within the Georgia legislature about the possibility of a strategic reserve for Georgia, and I'm hopeful that I can be involved in that to some degree to help them understand Bitcoin a little bit better, and perhaps even think about actually holding keys within the state. It's would be a shame if all of this adoption happens and there's just a concentration of these IOUs in Coinbase or some other custodian there. I'd like to see a little bit more diverse approach to actually managing the asset directly. If you're a state and you're looking to reinforce the sovereignty that you should have under the Constitution, the way that it was written, you probably need to make sure that you're taking the reins on the control of this asset that you actually have the ability to do, and not offloading that to an entity that could be fairly easily federally commandeered. And the federal government's going to continue to move slow, even though we saw Howard Lutnick talking I think it was yesterday or the day before, just reinforcing their commitment to building this strategic reserve at the federal level, and still staying at the forefront of that process. So maybe they'll be able to move a little bit quicker than we all expect. It certainly seems like it's been slow relative to maybe the market's expectations or our expectations. But you got to remember, this is like a behemoth that has a million other priorities. And, the administration's focused on the tariff war and, all of this other craziness that is pulling attention away from something like this. That, let's be fair, right? The constituents in Arizona don't understand Bitcoin. They have no idea why Arizona would hold a strategic Bitcoin reserve. That rings true in Georgia. It also rings true across the country and at the federal level. So I think it's still like a pretty long upward battle to actually make some meaningful progress on that. But I think we'll get there eventually.
I'm curious, Trey, since you work at Unchained, what do you think the recommendation would be if someone from whether it's the Arizona state government or otherwise reached out, they said, hey, we want to be able to have more control over the Bitcoin we own. We don't want to just keep it on an exchange. What do you think the recommendation would be for an entity that large who also wants to take custody more seriously?
Yeah, I mean, they need to put together a very fulsome framework for custody and get buy-in that taking that sovereign view of things is the appropriate measure to take for the security of the Bitcoin that they would be holding. And then they should be using Bitcoin's native property as a multi-sig to ensure that they're distributing the control across the various constituents within the organization that need to be involved in any kind of decision-making process for how Bitcoin would be moved going forward. And there's a lot of different ways and layers that you can build on that. This is, a very common problem or question or issue that organizations of all sizes and shapes need to come to grips with. And it's very common in the traditional world as well. Like you always have some group of people that are managing the finances for the larger organization that the larger organization trusts to do the right thing for. So that doesn't magically disappear just because you can hold multiple keys for Bitcoin. But there is an appropriate way to approach this that allows you to bring the control of the asset closer to home, not rely on a single custodian, not be in a position where if there's some type of major attack or mishap in a custodian that you've actually lost the underlying assets that you've got those IOUs for. And that you can actually operate as a sovereign state the way that it was intended to be done.
Yeah, I think it'll be super interesting to see that play out, and would love to see Unchained involved in helping states along with that process, because you can help set up a 2 of 3 or 3 of 5 or even more, using Bitcoin's native properties to ensure those signatures. Maybe even they're looking at getting insurance on the Bitcoin, through a company like AnchorWatch or otherwise. There's a lot you can do to now, when you're taking that control, and I think ultimately removing that counterparty risk and showing the sovereignty of states, and in the federal structure that we have to take control of their assets and not be reliant on the overhead of the rest of the federal government to do and improve the lives of their constituents. So for the people, by the people. And so I think Bitcoin really is that kind of asset. So it's going to take individuals participating, educating the legislators, getting in there, creating nonprofits or other organizations just to really educate all the key players, because it's going to be very new for many people and players in the space. So that education is really key.
It's always amazed me that these like sovereign nations who have gold reserves would choose. I don't know, maybe it's not a choice, but they have their gold reserves stored at the Federal Reserve in New York or in the US in some facility like Fort Knox or whatever the case is. It's like, what point is that serving for you and from your perspective to ensure that you've got this gold reserve that could be used in times of crisis, or to underpin the value of your currency and that kind of thing? It made no sense to me. It makes no sense that you would do that same thing with Bitcoin, especially as it being, digitally native and having these properties built into it. So I hope people's mindset shifts at that sovereign level, and they start, as the world fractures more and more, which is what we're seeing, that they start actually taking this question, this issue much more seriously and bringing things closer to home.
So one thing is for sure, these larger entities, whether it's a big corporation or a state or a nation, is going to move more slowly. You as an individual, you as a business owner can move much more quickly. So take advantage. There's a lot happening beneath the surface that we don't know about. And the time for action is now if you've not yet taken action. So I encourage anyone who is listening to take advantage of some of the resources that this show and these guests provide. Maybe as we're finishing up today, Jon, you can share first, then Trey. But what are some things that you'd recommend for business owners listening to this today, and where can people go to keep up with what you're doing in particular?
Yeah, I think business owners, can continue to stay curious and really reading up on Austrian economics, but also kind of more recent economic history and understanding Bitcoin's place both as a technological revolution and monetary change of magnitude. And recent books like The Bitcoin Age by Nick Bhatia, like The Big Print, Larry Lepard. These are books that just such high quality reads that continue to come out year after year. I mean, I've read probably dozens of Bitcoin books at this point and love just digging in, but you really learn a lot from an individual's perspective and applying that to your own business and really trying to reach out to more customers in your area or online that will take an interest in you having a Bitcoin strategy. So my work at Satoshi Health Advisors is really helping business owners along that journey and understanding Bitcoin, how they can integrate both the treasury strategy, accepting payments, being really practical about how to accept Bitcoin and Lightning payments, and then marketing to Bitcoiners out there, maybe offering rewards, getting creative about how you can reach your ideal target customer and build your loyalty in the brand, because Bitcoiners do certainly have a lot of loyalty with the brands and the products that they find and the business owners that they want to support instead of the big behemoths that are out there. You're able to find such higher quality products and support those businesses and pay in Bitcoin and really fuel that economy. So you can check out SatoshiHealth.com, follow me on X or Nostr. I'm at the Bitcoin Yogi, and always happy to continue having these conversations.
Yeah, it's such an important point about just leaning into the natural marketing juice that you get when you are public about the fact that you accept Bitcoin, that you're a Bitcoiner, that you've got Bitcoin on your business balance sheet. There's a lot of extra network effect that you can get from a very passionate group of people. And you know what? If you're worried about like your brand or something like that, look around. It's not so weird anymore to be like the one-off guy who's got a Bitcoin accepted here or Bitcoin preferred here sign on the front door of your business. I think if you are leaning into that marketing side, you're going to bring more eyeballs in your local community. You're going to find those Bitcoiners who want to come shop, and they're going to tell their friends, oh yeah, I went and got a beer at this brewery over here and they accepted Bitcoin, and that's super cool, right? And so you can really like get a lot out of just being a little bit more forthright and proactive about leaning into that message, and then just make sure that you're bringing the ownership of that into your own control. You manage a lot of very complex things as a business owner. This is not all that difficult. We can certainly help you at Unchained, but regardless of whether you're working with us or not, make sure you're taking the right steps and not relying on a custodian to do that. It really empowers you and empowers the business to operate at a sovereign level, and that's ultimately what we're here for.
And don't forget to check out Trey's Fire BTC Substack as well. That link along with John's website are down below. Guys, I appreciate your time today. We'll talk again in a couple of weeks.
Absolutely. Thanks,
y'all. Talk soon.
Well, friends, it's a wrap. Thanks so much for listening to this episode of the Bitcoin Playbook. If you want to reach out to either me, John, or Trey, you can find those links down in the show notes. Be sure to follow up with some of the content that they're creating and keep up with what they're doing. As always, keep building, keep growing. Until next time, keep living and leading well.